Good evening, ladies and gentlemen. As the introducer said, Chrometco is based on the Western Limb. We're also a PGM chrome producer, and we're trying to get those synergies to achieve better results for our shareholders. Since our last chat here, we think we've really achieved a quantum leap forward in terms of getting into a production. We form strategic partnership with other stakeholders in the chrome industry, and we're busy with our diversification. Who are we? We're a small minerals exploration mining company. We are really an anomaly. As an exploration company, we've been going for the last 10 years in a listed form on the JSE, and we have intermittently been mining chrome, and we restarted doing so towards the end of last year. We're expanding in PGMs, and as a cornerstone of that is our acquisition of the Inque PGMs over one of our mining assets. We're really a very small player, so we're a market taker. We, for example, in the last 2 years, had to stay out of operation simply because we couldn't justify the prices that we could achieve for our chrome ore. And it makes us opportunistic, but we are really taking full advantage of those opportunities as and when they present themselves. We listed on the JSE Altex, and our primary asset is Rhoderand. We have a resource statement of 60 million tons of chrome. This is a map and an outline. You can see the circle to the middle left, which is the Pilansberg Nature Reserve. We're northwest of it. That's sort of a zoomed in version of it. We have portions 2 and the remainder portions of Rhoderand, with the well-known platinum assets surrounding us. What's new since we've spoken last? I think really Eskom is predominant in our lives. They stopped their buyback of electricity from the large smelters, and they also are in the process of expanding capacity, and that forced the inland chrome smelters to go back into operation, causing a bigger demand for chrome ore. Simultaneously, there were some unrest in the PGM industry, and it caused, in our opinion, a bit of a shortage in inland chrome ore, and we capitalized on that. We went into partnership with IFM to buy the chrome ore and mine it jointly with us, and that kicked off very well towards the end of last year. We went into mining, and we have a target of about 20,000 tons a month, which I think we should reach pretty soon. Now you'd say, it's not a massive industry. It isn't, but for an exploration company, securing that income stream is critical for our long-term survival, and it places us very firmly to look at other things. There are a few pictures. You can see there are real trucks running around. There's real ore. We're really in production, which for an exploration company is a massive achievement. So what are our dreams? What do we want to do? Looking ahead, this is where we are. The 2 shaded blocks, the remainder portion and portion 2. On the remainder portion, we far advanced with our deal to include the PGMs into our chrome reserve, and we're mining chrome on both, and we have new order mining rights over both of those. Now, the rest of the grey on the next slide is platinum, and you'll see right to the north of our properties is their open pit, the so-called Tussenkomst pit. Now, the reason we're showing this to you is we think we have Elof Street on the monopoly board, and my challenge is to put greenhouses and eventually a red hotel on it and making it paid. The red stripe there is the outcrop of the UG2 ore, and you can see it's a continuation of what platinum is mining. And they're mining about 250,000 ounces a year, PGMs. well-established infrastructure, and this is really prime property. Why? Because it's open-pittable. As the previous speaker said, there's nothing beats open-pit PGMs. It's a little bit more to give you a scale. We have about a 3-kilometer strike outcrop, and all the infrastructure is there. The labor force is there, the concentrator is there, the tailings dam is there. It's just such a natural progression for us and for them and the other stakeholders involved to look at a deal that's mutually beneficial. And it's about 3 million ounces that's open pit mineable. It's really nothing to sneeze at. A little bit more of that. That's what the Uber pit would look like at the end of its life. And why would Chrometco be the driver for this? I mean, there, without any doubt, much bigger stakeholders at play here. But I think it's an opportune time for consolidation of those assets. And Chrometco has the mining right for the chrome, including the chrome in the UG2. Another question you might ask is, why only now? I mean, there has been a long ongoing dispute between Platinum Australia and Anglo Plat over the chrome mining rights on portion 2. Sadly, Platinum Australia went into liquidation and the rights came back to Anglo. So again, no dispute makes it much easier for the stakeholders to see eye to eye on this. And that's what we'd like to achieve in the foreseeable future. We don't have a deal, and I'm not for 1 minute saying we're going to get one soon. I hope we do, but we are definitely working towards it, and we have already started discussions with all the stakeholders, and they all agree that there's definitely joint value to be extracted here. Disclaimer at the end, and I'll leave the next 10 minutes for you to read it, but no, I won't. Thank you very much.